Good day, traders. Then welcome. This is the rundown live from the Tradelo trading floor. We're going to start off with some of the observations from yesterday. Well, VIX is right back on 14. It got crushed again yesterday. We had a very, very late surge, in particular the US equities into the close. And again, that's a combination of things that we've been talking a lot about, this VIX crush trade over the last couple of weeks. And it's still very much, a strong trade. Now, going into today's session, we had some interesting news overnight from Fed's Waller. And interesting, not necessarily because he's changed his stance. If anything, he's been a hawk over the last couple of months. But what he did say was interesting. And he told us that, yes, they've obviously made a lot of progress on inflation. But he told us that the Fed may need to maintain its current target rate for longer than expected, and that he needs to see more inflation progress before supporting a rate cut, and he needs at least a couple of months of data. Now, the word couple is important. Obviously, we see central bankers use this word quite often to signal at least two, so two or more. And that's why it's interesting. He's giving us a little bit of insight as to perhaps what the consensus thinking at the Fed is. Remember, keep in mind, from the dot plot we got just a week ago, it was a very much even split whether or not they'll cut 2 times this year or 3 times. So if he's talking about a couple of months of data to be sure inflation is heading to 2%, what he's telling us in essence is that the first likely month, if there was going to be a cut, will be June. Okay, very, very unlikely it's going to come before that. And if anything, it's very possible that it's not June and it gets moved into September. Now, what he did also say, which is quite important, was that because the economy is so strong and because of what the data is doing, it suggests that fewer cut rates are possible this year. He also told us that, the economy is doing very, very well, and that the case for hiking rates is very, very remote. So very interesting from Fed's Waller, not because he changed his stance, but because he probably gave us a little bit of insight as to what the consensus is at the Fed on this recent bout of higher than expected inflation. Now, coming into today, obviously, we've got, the last day of the quarter and month, and it's also ahead of a very long weekend. Now, keep in mind, tomorrow, Friday, we do get the PCE data, which is the Fed's preferred gauge of inflation. And this is really, really key, and it's going to set the tone very much for what happens next week. Now, going into that, as you can see on the PCE chart I've given to you, the key for this data ultimately, and it's very, very important to understand this, is what does the data print? Now, remember, PCE is very much derived from the CPI data. In other words, a lot of the components that go into the monthly CPI data, which we get in the middle of the month, go into the PCE data. Okay, so there is an expectation that we're going to get a little bit of a hotter number. Okay, and that's very, very important to understand because it will give you a good idea as to what we're likely to do on the Sunday open when the futures open after the long weekend. Now, very, very important, as you can see on the chart, we printed core PCE at 2.8% last month. It's expected to come in again at 2.8%. Okay, so there's no expectation for that to pick up. However, what we've noticed, if you look at the 3-month rolling average of the year-over-year PCE core, it's sitting at around 3%. Okay, and what we're starting to see is that, yes, that trend is very, very firmly to the downside. And this is why Fed's Powell is so confident that the trend is still very much intact and that the last 2 inflation readings are nothing more than bumps in the road. Okay, and that's why he's so confident. That's why he sort of says, look, we still think we're going back to target over the next 2 years. We're not going to panic because of too hotter numbers. And we are going to keep on track to cut 3 times this year. Now, what that means is going into the print tomorrow, keep in mind also Fed's Powell is going to talk tomorrow. Perhaps he will say something about the PCE. And what's important to understand is, does he repeat this? Does he sort of shrug away the inflation print, the PCE print? Does he talk it down again and say it's just a bump, it's mostly expected, we still think everything is fine? And that's going to be the real key to listen out from Powell's speech. But what you want to watch out for as well is, if the number comes in line, in other words, 2.8 on the core and 0.3 on the month-over-month core, if those numbers come in line, in essence, that will be taken very dovishly from the market. Why? Because remember what Powell told us. He told us that they're very confident that ultimately inflation will continue to trend lower. And all they need is a little bit more, sort of evidence from the data to get enough confidence to begin the cutting process. Okay, so the data doesn't have to come in lower. It doesn't have to down tick to 2.7 core. If it comes in 2.8, that is exactly what will make the Fed very happy because it'll show them that those sort of bumps from Jan and Feb were very much just seasonal and we're likely to continue the trend lower. Now, what moves the market significantly? Well, an inline number definitely will have some volatility on the open, but a miss, even a 0.1 miss, whether, if the core comes in 2.7 or the month over month comes in 0.2, that will create some significant dovish moves on the open on Sunday. What you're looking at is steepeners. Okay, so the front end of the bond curve is going to rally pretty aggressively. Gold is going to rally pretty aggressively. The dollar perhaps will also get sold on that. So keep a very close eye. Any misses, make sure you're actively trading on the Sunday night. Do not, expect to come in on Monday and then partake. Why? What typically happens as a day trader, okay, and this is an important pattern you need to understand. When there is a repricing event that takes place at the Sunday open, what typically happens is we get all the volatility in the overnight session, and then in the day session, okay, you get not necessarily less volatility, but you get a lot of sideways chop because there's a lot of position scrambling. Okay, so if you're going to trade ultimately the PCE data, you've got to do it at the open on Sunday night, and you've got to expect some gaps should the PCE number miss. Now, in terms of the beat, very, very important. On the upside, let's say the inflation does come in a little bit hotter, 2.9 year over year, or perhaps 0.5 on the month to month, okay? Yes, you're probably going to get some gaps on the Sunday open, but keep in mind, there is an expectation for the data to come in a little bit hotter. Why? Because of the hot CPI print we got in the middle of the month. Okay, so very important to understand that. And what that means is that, yes, you will get a little bit of volatility on open. Okay, you will get, perhaps a gap lower in the bonds, but be very cautious looking for significant moves. If anything, the gaps should fill. Why? Because remember, the Fed has told us that ultimately, yes, they recognize and accept that the recent inflation is a little bit higher, but they will continue to maintain the stance that they will cut this year and they will just want to see a little bit more evidence. Okay, so be very, very cautious being too strong on the hawkish side simply because of what the Fed members are telling us, but also factor in Powell will give his comments and those will also play in a role as to what happens on Sunday. Now, in terms of going into today's session, keep in mind the volumes have been very light all week. That's not expected to change, but today is month-end rebalancing. If you're trading the European bonds rebalancing, that typically starts just after lunchtime. And then the US session, keep a very close eye for those flows around 6:30 GMT, so London time, 6:30. That's when you should start to see the business hour begin. And if you look at yesterday's charts, that business hour started at 7 London time. So again, expect a little bit of volatility, a little bit of sort of price pressure, particularly to the downside, perhaps around that 6:30 p.m. tonight. Keep an eye on those flows. Like I said yesterday, the key part to trading rebalancing, do not fade it, do not provide liquidity to it. Go with the flow or stay out of it. Okay, it's not a time to become technical and pick levels. It is a time when that order flow comes and those big positions come to the market. Go with the flow or stay the heck out. All right. Otherwise, that then leaves us effectively for a long weekend. Have a good Easter break and good luck for today. Make sure you manage that risk and go and make some money.